Now, as you guys already know, or I'm assuming you know, the market is made up of highs and lows, kinda like a roller coaster. The market is always fluctuating. Our job as a trader is identifying how the market is currently fluctuating, if it's currently going up, down, or consolidating. Now, you may be thinking,
Trading Lab, are you an absolute idiot? Can you not see? You can just look at the chart and tell if a market is moving up or down.
first off, that was kinda mean. Second off, I'm gonna have to ask you to calm down. This is actually the part where most traders make the mistake. Looking back at a chart, it's very easy to say, oh yeah, price is uptrending here. Then it started to consolidate and then started downtrending. Easy peasy. Yes, a monkey with a computer can look back at a chart and tell what it did, no offense to monkeys. But if you've ever traded live, you've probably realized it's a lot harder to tell if it's an uptrend, downtrend, or consolidating while live trading. And if you don't know what direction the market is trending, well, you're really just guessing at that point, and you're bound to lose in the long run. But what if I told you that I have a secret formula and a step-by-step guide to easily identify what type of market you're in? That would be pretty cool, right? Well, here it is. But first, let's talk about today's sponsor, Hanko Trade. If you don't know, Hanko Trade is a forex pro. So if you've ever wanted to trade currencies like the dollar, the euro, or the yen, this is how you would do it. Trading currencies in forex is seriously one of the best ways to trade. A lot of traders actually think it's the best way to trade because the markets are a lot more stable and easier to predict, which is always a good thing when you're a trader. So if you want to trade these currencies, Hanko Trade is the way you would do it. They are also running a special promotion where if it's your first time depositing and you sign up with the link in my description, they will match whatever you first deposit. So if you deposit, say, $183, kind of a weird amount to deposit, but hey, you do you. Once you deposit that $183, they will match that and give you an extra $183 to trade with. They're awesome. I'll leave the link in the description. Thank you for sponsoring this video, Hanko Trade. Let's get back to the video. So one of the very first things you learn as a trader is highs and lows. If the market is making higher highs like this and lower highs like this, the market is trending up. If the market is making lower lows and lower highs like this, the market is trending downwards. Pretty simple. So say if the chart does something like this, it makes an upwards movement. Now, if we go by what we just learned, we'll see that the chart is making higher highs and higher lows. So we can call this an uptrend, which it is. So far, so good. But then something interesting happens. The chart will start moving downwards, making this low, like this. Now, this exact point is where I see the masses make the mistake. Not even joking, I've seen professional traders make this mistake. A lot of traders, when they see price make this low right here, they think the chart is now in a reversal because it made this low, and they think it's gonna start heading downwards. So a lot of traders, they'll enter a short right at this breaking point. This is a crucial mistake. What if I told you this chart is still fundamentally bullish? You see, sure, price made this low right here, but this is not a valid low. Why? Because price never broke the higher low, which is right here. In order for price to turn bearish, price needs to break this point, which it never does. The chart is bullish until that break happens. So here is usually where the shorters will enter their trade and end up running into trouble because the chart will head upwards after this, making them lose the trade. Now, you might be a little confused, so let's really clear this up. A low is only validated if price makes a high, okay? So in this example, we have this. This low is only an official low once price breaks this point, which is the high. If price just does this and doesn't cross that high mark, this is not an official low. So here we cross, we now have a valid higher low, and now we're starting to make higher highs. So we now know this chart is an official uptrend. And now that we have that bias in the back of our head, we can now take bullish only trades. It will only be considered a downtrend if price breaks this point. It can do anything after this point. It can go up, down, sideways, anything after this point. As long as it doesn't break this low, it's an uptrend. So continuing with our example, if price does something like this, you may get confused and think this is a low. If you remember from the core idea of what I said earlier, we only consider it a low if it breaks the prior high. So in order for this to be an official low, it has to break this point. So say if it does break this point, our new low point to break is moved from here to here. This is our new low. So now for price to be considered a downtrend, it now has to break this point, and then the process continues. Let's do a bearish example. Price is making lower highs and lower lows. We only consider this point a high if it breaks the low, which it did. So the price action is in a downtrend, and the only way for it to be considered a reversal and to be considered an uptrend is if price breaks this point. So if price does this, a lot of new traders traders will think this is a break and the chart is now uptrending, but this high is not validated because we didn't break this low, and we have not crossed the actual valid high point yet, which is right here. Until we do, we are still in a downtrend. So in this example, you should only be taking short trades. Once price breaks this point, we are now officially in an uptrend and you can start taking bullish trades. It might seem a little confusing at first, but if you're having trouble, just rewind the video a couple times to really get this idea down. I promise, once you understand the structure technique, it really becomes second nature seeing it on charts, and you don't really even have to think about it. It's an extremely important part of trading. You get what I'm trying to say. Alright, so why do we need momentum in the first place? One of the biggest reasons why traders look for momentum is because momentum literally makes your life so much easier. For one, when a chart is moving up and down a lot, it's a lot easier to predict. When a chart is moving sideways or is consolidating, it's a lot harder to predict what is going to happen next. So as a trader, you want to see a lot of movement on your charts. Now, this may be a lot easier said than done, especially if you're trading in real time and not just looking at a chart from the past. That is, until you see these tricks. Let's start simple and start with the first trick though. The first trick is absolutely fire. It's absolutely wicked. It's candlesticks. Those were candlestick puns. But not wax candles. Oh no, the candles on your chart. A lot of people overlook this, but candlesticks can tell a story of a chart. I like to think of the chart as a book, and each candlestick is a little page of what that book is trying to tell. What I mean by that is this. Whenever you look at a candle, you can see what the buyers or sellers are currently thinking, literally in real time, which is basically a cheat code when trading. Now, as I'm sure most of you know, there are candlestick patterns. Sure, they can be useful, but what I'm about to teach you will make it so you won't have to memorize any of those patterns. You just need to look for these certain cues. When looking at these candles, we are looking for a few characteristics. The first one is the wick. The wick itself can tell us a lot. So if we have a candle that looks like this is saying that sellers got the price all the way down to here, but the buyers fought them off and got the price back up to here, which is a pretty bullish sign, as you can almost think of it as the buyers won the battle. If the candle looks like this means the buyers got the price all the way up to here, but the sellers came in and fought them off and got the price back down, which is a pretty bearish sign. Just this simple wick idea can give a pretty good indication where the chart is gonna head next, and what the buyers and sellers are currently thinking. The bigger the wick, the stronger the sentiment. So, for example, if we see a candle like this with a long lower wick, we can assume that the chart will head upwards after this, as it's showing the buyers fought off the sellers and are now in control, which it does head upwards after this. If we see a large candle like this with a big upwards wick, we can assume the chart is about to fall, as it's showing the sellers are winning the battle, which is exactly what it ends up doing. This can be used on any time frame, but just know they will be stronger and more consistent on higher time frames. Now, I also think this is worth mentioning. You should not enter purely based on a candlestick. For example, seeing a large lower wick and entering a long right after it forms? No, do not do that. How I like to think of trading is almost like a checklist. The more checks you have, the more likely the trade will go in your favor. So this candlestick thing can be used as a good indication of what the chart is likely to do next, but you shouldn't enter purely based off of it. You should use it paired with everything that I'm about to teach you and use it as an extra check on that checklist. Now it's time to go to the second trick, and this is when we start getting into some really cool stuff. This one single trick will help your trades immensely. But first,
how would you like to double your money?
Yes, you heard him right. You can double your money.
How do I do that?
Well, there's a forex broker out there that I personally use, and their name is Hanker Trade. If you use the link in my description and it's your first time depositing, they will match whatever you first deposit. So say if you first deposit $69, they will match that and give you $69.
That's pretty cool.
If you need a new forex broker and want that deposit bonus, use the link in my description. Alright, this next trick I use for every single trade I take. Once I implemented this trick, it instantly made my strategy work better. It involves using this. This is the key metrics table for my private indicator, and it gives a ton of useful metrics of what's currently happening in real time. I created this table because I know just how important metrics like momentum and volatility are, and I wanted a fast way to present those values so I could use it to my advantage when trading live.
I can't do it. We'll do it live. Okay. We'll do it live!
So what we are looking for are a couple metrics. The first metric is volatility. Like I said in the beginning of the video, the more the price moves, the easier it is to predict. The less it moves, the harder it is to predict. Volatility is the rate at which the price increases or decreases. In a perfect world, when we are entering trades, we want the volatility metric set to high, as this tells us the price is moving a lot, which is exactly what we want. The next metric we want to look at is the momentum metric. Now this metric is one of the most important, as that's what this whole video is about. If you are entering long trades, you want this to be green and say bullish. If you're entering in short trades, you want this to be red and say bearish. You can also use this to tell when the trend is starting to change. For example, say if we were in a long trade here and the chart is going up and the momentum is set to bullish. We're in the clear and know we can stay in the trade. But once it gets to this point and the price hits a pretty strong resistance and the momentum on the trend table turns to bearish, this could be a good sign to exit the current trade, as the momentum is starting to change. And you can also see here that one of the candles right here had a long upper wick, which is what we were talking about before. So because we have a strong resistance and because we have a large upper wick on this candle and the trend table turned to bearish, we would exit this trade, which good thing we did, because the chart heads downwards right after this. Hopefully you're starting to see, when all of these tips are put together, how powerful they can actually be. You can also use this strength metric to see the strength of the current momentum. The higher the number, the stronger the move is. The lower the number, the weaker the move is. Overall, this trend table is extremely helpful. I cannot recommend it enough. It completely changes the way you look at the market. If you're interested in checking out the indicator, you can go to tradinglab.ai, or I'll leave a link in the description. Okay, so we know the first two tricks I use for momentum. The third trick is just like the cherry on top. The third trick involves using volume. Volume is a very, very, very important part in trading. Like I've said time and time again, we want a lot of movement on charts, and the only way you can have a lot of movement is by having a lot of volume. But when looking at volume, it can kind of be confusing on what's happening because it looks just like a lot of random rectangles on your chart. Well, here's a simple but very effective way to use volume in order to see the momentum of the chart. When you're in a long trade, you want the bullish volume to be increasing, as this will make the chart head upwards. So what you want to see is something like this, where the bars are getting larger and larger and all of them are green. This shows there's bullish momentum and it's getting stronger and stronger. You don't want to see something like this, as this means the chart is probably consolidating and not moving a lot and there's no momentum. As an extra little hint, the trend table for my private indicator also has a volume metric. It will basically identify all of this for you and tell you if the volume is currently bullish, bearish, or if there's no trend at all. This is a very simple little trick, but volume is very, very important when deciding to enter or not. If you don't have volume, you don't have a good trade.